The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, folks. Let me see if I can even remember how to say it. Yes, this is Basil Chapman, the Tiger Technician's Hour. This is a live edition, the Wednesday edition, 21st of August. And, of course, the Dow is down 40. The S&P is down 389. Oh, my goodness. Just persistent. You remember what I always say? In a bull phase, all pullbacks are bought within 1 to 3 sessions. And the rule, simple rule, whether it's a 1-minute chart or a monthly chart, as long as you're making higher highs and higher lows, it's in a bull phase. In a bear phase, now, bear phase could last 1 minute to a month. Monthlies. Lower lows and lower highs, and every opportunity to rally is treated as a selling opportunity. Wow. That's exactly what we're seeing. Here's a chart of the Dow. There was an opportunity this morning with a positive divergence in the technicals in the 120-minute chart to at least have an attempt at a rally. Nothing. Opens down, gaps down, and stays down. Hits that really critical, I said this morning, you've got to have the concept of support levels that either hold or if they break, it creates a vortex from which lower prices can be reached. Now, this is going to be very interesting. Why? Because in the 120-minute chart, if you're looking at Tiger TV, let me just do this because I do want to show it, and I want to know that you're looking at exactly the same charts. Let me hopefully, I've got the volume off. Yep, everything's set. Yep, there it is. Beautiful. I love Tiger TV. We just have such an awesome set of technical tools to be able to, anywhere in the world, you just grab TFNN, go to the front page, you see those 3 little icons on the right, click on one, and you're bound to get the charts. This is I'm showing right now. Look at this. The Dow made a top at 15,658 on the 2nd of August. Peak F in the Chapman wave methodology. Wow. What a beautiful technique. Why? If you've got failing technicals, and it manages to squeak to that right arm extension just above the previous high, in this case 15,604, and then fails, that 9-period moving average, the black line, becomes what? A resistance level. Keep it simple. And you remember that tool that I work with, that I added just to be able to show everyone, just another one of the plethora of Chapman wave methodologies and techniques? See that little pink line there? That little one there, I'm just highlighting. That little pink line said ages ago, back when there was a peak D and we went short the Dow. Initially, we were still short the Dow from that level. It was a fairly wide stop and didn't get close to being hit in our short position of the Dow inverse ETF. That was telling us that there was tremendous resistance in that area. Now comes the really tough spot. Why? Why? Because there should be a bounce. But wait a minute. If there isn't a bounce, that means that that's why I wanted to do today's session. It is so critical that today, after 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, this is the 13th day, after more than 10 sessions to the downside, excuse me, let me just have some, guess I'm not used to this talking. So many sessions to the downside, you would anticipate that there'd be a bounce. And what did we do? I'll tell you in a moment what we did. When you get a second leg down in this sharper decline, I always look at it and I say, okay, you're using time just to a certain extent, 10 bars, 11 bars, 11 sessions. But you're really using time and price. If you look at it on a shorter term situation as you're looking at the 120-minute chart. But if you're looking at it in a daily to weekly chart, 10 sessions down is really not very much. But it does say that at any point you can start to see a flattening out. And what I'd said to my subscribers in my opening call this morning, 14,970s to 14,940s is going to be a key key area today. And one of the reasons why we went long to counter this, keeping all our short positions, adding a counter trend long position. And to tell you the truth, I can't tell you right now whether we're still in the position or not. It was a little complicated, depending on where you got in. 40 cents, 60 to 57. I just don't know whether it was hit by the penny or not. But this is a position that I was prepared to take with a very tiny percent stop, because if there was a bounce that was going to occur, it should occur today, and it should occur by this morning. If by this afternoon we're down 60 or so in the down 6 in the or more in the S&P, that is a really terrible action, and I'll explain why. Because this pattern I'm looking at, the 120 minutes, should have created a very nice pop to the upside above 15,075. That's all it needed. Wasn't a big deal. Couldn't do it. Very negative. Okay, that's number one. So now let me run the numbers, because as I said, today is a very important session for a couple of reasons. One is it's midweek of the second week after, the third week after a peak D in the weekly chart. And that's almost certainly going to imply that I can put, even if we're in the midweek and we haven't finished by Friday afternoon, we finished the weekly bar, there's just a really good chance that at the end of this week, on Friday, I'll be putting a down arrow in the weekly chart, and the implication there is time and price. And now you're going to start seeing time extend in the daily, and the weekly suggests that there could be a number of bars to the downside before there's a successful reversal and even a buy signal is triggered. Number of bars, I don't know yet. So now, let's do this. We've got the Dow down 48 at 14,954. You got the S&P lagging a tad because it is only down 0.27%. S&P, the Dow's down 0.32. S&P down 0.27. But and the action has not been quite as bad as the Dow in the daily and the weekly, but the pattern's the same. But both charts are saying there's a leg D in the monthly chart. So all I can say is, up until now, I have absolutely no reason why I cannot think that after this very important digestive phase is concluded, digestive phase implying sideways to down market, there should be higher highs to come. So far, that's what I'm thinking. I don't see any reason to change that. So in longer term positions, I would stay on the long side. Now, the Qs, 1, 2, 3. The NASDAQ QQQ series, this is the Power Shares Trust, trading at 75.73, is holding quite well. Now, I normally would say that part of it is Apple, and absolutely part of it is Apple, but it's also part of some other stocks that have done pretty well and held very nicely, and they were the last ones to make their highs. So I'm looking at this and I'm saying, okay, 77.18, I have to put a down arrow there. I have no choice in the daily chart. I have no down arrow in the monthly, in the weekly, and the weekly is still F/B. Alternate wave count means, whoops, don't put an up arrow when you mean a down arrow. That could be very confusing. Down arrow, there it is. Okay, so now we're looking at the Qs holding very well within the up channel of the weekly, within the up, it's still above the up channel of the monthly, and it's going to be very important within the next, by the end of August, if the QQQ series are trading under 74, that'll break that 9-period moving average weekly support for the first time and say, hey, be prepared for a pullback, maybe even to the 72s or lower. So, what we're looking at is the QQQs are holding up better. Let's go to the IWM. IWM is the trust, the iShares Russell 2000 ETF. Come down, trough A, trough B, bounce, tries to go to the 9-period moving average, fails, peak F in the weekly, peak E in the monthly, weekly, peak F in the daily at 105.63. That peak in the weekly is only peak E, and I would really need to see a close below, it's at 101.50, down 60 cents, a close below 100 to finally give me a down arrow. And I'll move this down arrow because actually what it'll be in this particular chart, it'll turn out to be that inverted V-shaped pattern, the little carrot. That's the alternative count that goes to a second sell signal when the first one meets all the criteria, yet the price still goes higher. I'm putting this in with a question mark just to explain to you what I would do right there. So the monthly chart leg E still very strong. Let's just deal with one thing at a time. Short term, sell mode. Intermediate term, sell signal, but I haven't yet got the sell mode. Okay, let's go to gold. Gold right now is just trading down a tad, down maybe $4 or so. Well, look at this. In the gold, where did I go? GCZ. Look at that. This is a lovely pattern. I'm calling this B for now. I have no reason to call it E. I'm calling it B, saying that gold can go higher. I love the action. Fortunately, we are long, so as we are short the Dow, the S&P, and the Qs, so we are long, and two other sectors, so we are long the gold via an ETF. And it trades as both a spot price. So let's just stop there for the moment. I'm just going to say that silver, gold is up, down 4, silver's down 9 cents, crude oil is down a tad, bonds are down 17.30 seconds. Give me a break. The bonds can't even get, it was peak after the TBT, maybe a peak if it recycles higher, and the dollar is up 34 cents. And I'm going to go to our first caller. We got Mike in Long Island. Hi, Mike. How are you?
Good, Basil. Can you look at the IYR?
Yes.
How would you advise someone that's holding a bunch of REITs for, high yield? If you were looking out, to me, this looks very shaky here.
There are a couple of things that I'm looking at. Let me explain the most important. I'm going to go from the very short term. Usually I go from the long term to the short term. But let me just do this. From the short term, right here at 62.13, the iShares Dow Jones US REITs Index Trust, trading at 62.13, down 27 cents, is attempting for the first time after making the pattern that I call the H pattern. Let me just draw that in so folks can see. There's your left side. Here's your right side. There it is, lowercase h. Breaks and closes decisively underneath the left side low of 62.71. 62.71. And it's attempting to rally, but it hasn't even had enough strength after the bounce yesterday to follow through yet. Above 63.19, the 9-period exponential moving average, which is resistance. That's the daily. So the daily has a very negative action, breaking below the left side low. But here's the issue. The stochastic is giving a W formation. I happen to like that. The MACD is giving a positive divergence between being higher now than when it was at the 62.71 low of June the 24th. So now let's move to the weekly chart, because here you've got the 200-period exponential moving average having been touched for the very first time in a long time. Folks, we're looking at this is commercial realty. It is the iShares, the IYR. Great question here from Mike in Long Island. We're going to come back and look at the IYR, very critical level that we're at this particular point. I'll be back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about The Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive The Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on The Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. Basil Chapman, Tiger Technicians Hour, and we are back. And this is live. Yep, this is live. Although I will be away for the next 2 days because I decided that I really need to just spend time with the family. So, what we're looking at here is the Dow that's down 50, S&P's down 5. The point is not that they're both down. The point is that they've been down for so many days. And the issue here is, and I said to my subscription service has been going, my daily service has been going out every single day. As many charts as I can do, not quite the same number as usual, but pretty much close. And in my Traders Corner, that's where we have all our positions, I refrained from adding stocks that we haven't had before, anything like that. Mostly I want to do just stay on the ones we've been focusing successfully on and see if this can be something of substance in terms of starting now to choose some of the great winners and treat them as potential losers on the downside. Now, let's go to the IYR, because the IYR was an unbelievable mover back in late 2011, right into the early part of 2013. Since then, it's gone from 76.21 to, finally I have to put in a down arrow. And I've got a down arrow now on the monthly chart as well. So it's saying this is something to take quite seriously in terms of if you have longer term positions. But as an income, you see, so we're on with Mike. And Mike, you know that my philosophy always has been, look at the stock, deal with the stock, treat what it could be an ETF, I don't care, but whatever it is, deal with it as if you wanted to buy it or you wanted to sell it. And then if it turns out that it's a dividend giver, that's fantastic. But don't buy a dividend giver in a trend that's going down when in fact you could, I don't have to tell you this, I'm just telling this for the listeners, you could be buying something at 100 because you're expecting a 6.5% dividend, let's say. Unfortunately, it goes from 100 to 89. So now it's down 11%. You're losing your capital 11%. So I don't want to do that because the dividends will never make it. Well, they won't never make it up, but it's going to be real tough for them to do. So now let's get to the nitty-gritty. I'm talking about the stock, the IYRI share, trading at 62.05. Having held so far this golden line, the 200-period moving average, this is actually the very first time it's even come close since it broke down and broke and it cheated that line back in the whole period between August of 2011 and then the breakout of December of 2011 in the weekly chart. When it broke out, that was fantastic, but it did go under it. Before, after the 76.21 high that was made back in May, I think it was, May the week of the 24th, it plunged down to 62.7. So that is a 12, that's 14 points, so that's about 18%. Then it rallied very nicely to 70. I think it just missed it. It went to 69.60. 69.60 the 26th of July, and then it pulls back, and what does it do? It closes last week below the 62.71 level, but it's now trying to make that 200-period moving average some support. Now, this is what I'm going to recommend. If one hasn't done any lightening up until now, the big question is, hey, is this a time to be lightening up or is this a time to be buying? Let me set that aside. Number two is, in the technicals of the weekly chart, the MACD is still very poor and the stochastic's gone to 18%, and it has the look that if the 60.91, let's call that for argument's sake, if the 60 support goes and it goes to 59, the stochastic's going to go to could go to the single digits or the low teens. Well, that makes it really important for any timing right now to work either as one would consider it a new buy signal, or one would consider it as a potential to start looking at lightening up. And that depends a lot on the monthly chart. And the monthly chart says, whoa, I've pulled back very sharply. The stochastic's down to 48%. And the beta has widened, the distance between the fast-moving average and the slow-moving average in the monthly chart of the MACD. But if there was any strength at all, and in the end of August, if there was a close anywhere in the 63 to 64.5 area, that MACD could say, hey, there's still residual strength. We could go a tad higher. I'm going to think the plan out now, taking your call into consideration. I wanted to do the analysis. Now I'm going to do your analysis. So hold on. I'll be right back with Mike in Long Island looking at a very important index, the IYR Trust Series, and that's the REITs. I'll be right back.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians. We're back, and so this is the conclusion that I've come to in terms of looking at the IYR for positions that are being held within the IYR. That is the REITs index. If you have the stocks, each one will be different, but if you're looking at this as an overall package, the rally that has just started in the IYR has to continue. It has no choice, because if it cannot get to 63.21, 63.98, what is today? By Friday afternoon, I'm not sure what's going to actually trigger it, because it's got all the credentials right now for a pop-up. The weekly chart right on the 200-period moving average hasn't been there for ages. The daily chart had an arch formation. It hasn't yet triggered a new buy signal, because that's what it will take. But even just a general rally should trade, at least take it towards the gap of 63.85 made on the 15th of August from the close on the 14th at 64.37 low. So that's what I'm looking at. So here's my recommendation. At this particular point, I would start putting on stops on some part of the position. I would even say on more than a third of the position. Maybe not more than a half, but at least a third of the position. If the IYR, and I have to do this as a general thing, I don't know the individual stocks, if the IYR closes, it doesn't have to take it out, it has to take it out and close under 60.92. So the moment it touches the 59s, even though that's the point where you'd start saying, gee, this is getting interesting because there could be a pretty darn good rally, you've got to be careful, because you are a dividend seeker and you do not want to lose your capital And if this thing starts to tank and the month of August closes underneath the left side low of 60.84, yeah, it's the same thing. If it closes under the 59 area, that could make September a pretty vulnerable month for this. So my recommendation is use this as a guide. Start looking at your positions. If it starts to close underneath that 60 level, that's really the support, I would take something off. And if it has a great rally afterwards, you're in some kind of position, but you're keeping your capital. You don't want to be losing capital when the object was to save your capital by getting in dividends, number one. Number two is, as it moves up, if it moves up, the real target would be a powerful move in the Dow and the IYR that rallies all the way. In this case, the Dow would go up to the 15,280 to 15,320 area as the IYR pushes into the 63.90s and then tries to get to the 64.50, 65.50 area. At that point, call me, because we got a lot of homework to do, because things could be improving a lot, or that could be the very level that the next rally failure begins. So I hope that helps clarify for you what I'm looking at, Mike.
Yep, thank you very much. Yes, it does.
Thank you very much for calling. It has been a very important index and sector. So let's go on, folks. And now, just remember, this is the Wednesday edition, the 21st of August. If perchance this is repeated into tomorrow or the next day, I want to give you the same overview I gave last week when I was going to be away. I said, let's look at the market. Same parameters are extant. Let's look at the gold. I was asked about, I had an email from one of my subscribers saying, having a 50-cent stop while hovering around the 83 mark on an ultra ETF is a little nutty, but I still greatly respect your system. Hope you're having a great vacation. Yeah, I agree. And the reason why I had the 50-cent stop, yesterday it worked. We had no loss whatsoever. And there was even a pretty decent gain intraday. Today, we have been taken out on the 50-cent stop, so big deal. It's just nothing. I wanted to ameliorate any rally by keeping our core positions that were shorted almost at the top. And the next thing is, I wanted to, at least on a short-term basis, there are traders, I wanted to have some of my traders at least attempt to play any bounce, and that was the best way to do it, the safest way to do it. And I knew that if it took out by 50 cents our entry point, I didn't want to be in it, even if it turned out at the end of the day and it rallied very well. Why? Because this is the 12th or 13th, I think, the 13th day of the down move in the Dow. Hey, you failed today. There could be a lot of disappointment. And here's the big kicker. I'm going to go back to gold in a minute, because I do not want to forget this in my overview, which is an overview for the week. The volatility index spiked to 16.24. You remember I've been discussing this a lot. And I had said that volatility index was starting to get excellent technicals. And what I showed my subscribers this morning, I'll show you this chart as well. I'm going to move this one out the way. Funny that bonds haven't moved up yet. I'll say yet because you would expect them to. Look, it is so important that you keep this in your peripheral vision. Yeah, like playing tennis. You always have peripheral vision, especially if you play doubles. Look, as this second U-shaped formation is forming in the VIX index, it is spiked to leg B, only leg B in 16.27, and normally it goes to at least to D. Keep that in mind in the Chapman wave. That's the beauty of this particular methodology. The next thing is that if you're looking at the downside, the XIV, it's about to break support. In fact, it has just now, as we speak. It hasn't closed, but it has broken support in leg C to the downside. So that's saying to me the next area of support for the XIV, the inverse of the VIX, would be around about 25, 30 to 25. And the next resistance for the VIX on the upside would be 17.32. That's the reason why I had the tight stop. I don't mind losing the 50 cents because our 1, 2, 3, 4, 5 short sectors should theoretically be doing very well on the downside. Question I had that didn't. Great question, because I was about to speak to that issue, and then I thought, you know what? Stick with the major indices. So volatility index 15 was the 200 period exponential moving average. It spiked over it. It went higher. I'm going to now take the plus sign because now I've got a confirmed at 92% in the VIX. I've got a confirmed buy mode. Do you understand my reasoning? My reasoning was that I'm prepared to have a little tiny trade to the upside, but this is the most short that we've been in. I'd even say in a really long time, the most short positions, and it's just because of the market conditions. VIX gets to the 17s, this market goes deeper down. VIX goes down to, it's at 1629, goes towards the 15 level. That's support, but that could be a nice reversal to the upside in the market. Now, I had a question about staples, and I'll get there because that's really an important indicator as well. But we're going to go to Victor in New Jersey. Hi, Victor. How are you? Victor. Victor. Hi, Victor. How are you doing?
Good. I'm looking for POM and Intel. POM pays like a 5.5% dividend. It's a utility stock. But I also wanted to let you know, the banks have to come up with living wills by November something. They pushed it back from July 4th. So to me, there's a setup there because they want to break up the banks, so they're looking to tumble the stock market.
Wait, the banks have to have living wills? What?
By October something. It was October. If you Google it, you'll see it. It was originally supposed to be July 4th. All the big banks have to have living wills set up by, it was sometime in October. I have the exact date at home. But I think they're set, and today they just came up with...
That's for their customers? That's for their customers?
For the whole bank. So they have living wills so they can split up the bank. So there's something in the background.
Oh, the banks themselves have to have that?
Yeah, something's going on, and now the Fed just...
Hold on, I'm going to look that up.
They're going to investigate all the banks now. Did you see?
Oh, yeah, this is an omen. I don't like that. Once the any administration gets their foot in the door with these legislative things, boy, it just never ever ends. So let me just do this.
Set up for something.
Okay, so the XLF is in a sell mode in the daily. It's trading at 19.77, down 19 cents. The weekly chart.
POM. POM.
POM.
Yeah. And Intel. What do you think?
Pepco Holdings. Yeah, so wait, what's Pepco? What's Pepco Holdings?
The utility company.
It's a utility company. Yeah, I'd be very concerned. It looks like the IYR, all these dividend stocks. Do you have POM?
No, but you got to buy one on sale,
Yes, I agree. So, okay, so do me a favor. Look at the charts, and you'll see that they are heavily below all the support levels. I would definitely look at the stock, but I'd only look at it. Wow, it's taken out the left side low of 18.82 back on the 11th of January 2013. It hasn't taken it out yet. It's about to take. Oh, it has. 18.82. Today's low.
What are you doing now?
18.75. Yeah, I'm going to suggest two things. One is that you hold off, but if you do want to nibble at it, the price that I'd be looking at is 1867. 1814, yeah. Between 1830, that's at $18.80. P for Philip, P for Peter, O for Oscar, M for Mother. It's trading at 18.80. I think that I would only start to nibble, and I really mean nibble. And what I would do is I would buy just a little bit. If it touches 18, I'm pretty sure it's going to do that. Between 1820 and 17.90, I would just start like 5 or 10 shares. And the only reason why I'm saying it, if you own it, you'll be able to tell every day how the market goes up and down and how it's starting to act or react. But if you actually ask me, would I buy it myself? I would rather buy it in the next uptrend than the downtrend. The monthly's in a downtrend, the weekly's in a downtrend, the daily is close to finishing a downtrend with the first sign of support in the upper 18s. But
it said it was a bullish 3 kicking candle. I don't know if that is. You know what I mean? I tend to think of it as the candle that was made yesterday. The action today is very negative unless within 2 days, actually it should be within 1 day. I'm going to say 2 days, by Friday. If it can touch 19.13, I turn around and say to you, great,
Now you can just nibble, but only nibble on it. I would prefer to see the weekly start to hold 19.56 as support, and then I'd say to you, great, now it's got a good 2 points to the upside. That's for a dividend stock. I want to get capital gain, and I want dividend. I don't want a capital loss and the dividend. You know what I'm saying?
Yeah, I guess they're afraid of interest rates going up, but that doesn't matter. They're conglomerates.
Yeah, there are a lot of things, but the stock itself is just, you asked me about the stock, POM, and I'm telling you that I would not do anything until Pepco Holding actually started to form some kind of a base. I'd rather give up a point.
Check out Intel when you get a chance, too. I want to buy
just
that.
Real quickly, Intel, because it's important to look at the semiconductors. Intel right now, not a great-looking chart. I'm concerned about this market. There are just too many important stocks. I would not be playing Intel right now. And the SMHs were fantastic. And the SMH gave a peak D in the daily. I think it's a peak F in the weekly. I haven't yet confirmed that. I just haven't had a chance. I'm almost sure it's a peak F. The SMHs look like, and the Intel chart would also make a difference, but the SMHs look like they want to test. They're at 37.24. They want to test 36.08. That's the low of 28th of June. Hope that helps you. Thank you so much for calling, Victor. I appreciate that. So be careful with it. And call me next week. We'll look at it again. But I'd be a little careful here. That was Victor in New Jersey. So let's get back to our story. So now I said I'm going to go back to... So VIX moved down. That's, to me, it's all about the volatility index. I've said that for I don't know how many years. And I'm going to stay with that theme. Volatility index. Now, look at this. The GLD... I'll use the GLD just for the moment because most people trade the GLD. It's in leg B in the weekly chart. The fact is that the stochastic and the MACD are supporting the rally, but it's not saying it's a sustainable rally yet. It can be. I'm just saying the technicals, the MACD is good. Stochastic's only at 53%. So now we have to rely on the daily. The daily says at 90.15, the stochastic is really good. The MACD is making an arch formation, still really good. I'm not impressed that gold itself, the GLD, is at 132.19. I do have an upside target of about 136s, but there was a chance, it's actually higher now, but there was a chance that the 138 level of the weekly chart is a potential magnet, and it'll only become a magnet, I can tell you this from my eye, the way that it's working, is that until... it doesn't have to close there, but until the GLD can touch, the high was 133.27 last week, until it can get to 134.15 to 134.25, the moment it gets there, then activated is the 136s and possibly 138 200-period exponential moving average becomes a target. What does that do to the dollar? Now, in the dollar, the currency itself, the dollar index, yeah, it's reluctantly making lower lows, but, and it's definitely not hit the 80.50 double bottom that was made back in June. After the peak D top, it's come down, and where does it come down to? 80.75. 80.75 is just 25 cents above the 80.50 double bottom, but it is an attempt to try to find some support. When I get back, I'm going to show you some longer-term charts, weekly charts of yields and all sorts of things. We won't have much time to do it, but it's plenty of time for us. The Dow is now down 78. S&P is down 8. That's why we took a 50-cent loss, and we've held our shorts.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern. on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Editions Hour. This is the final segment, and let's go through the numbers. SPLS, that's Staples. It's really important. I'd spoken about Staples possibly making a turn to the upside. But when I got to that, we did not get back in, and I kept watching it. We got to the peak D at 16.81 back in July. I said, no. And it suddenly ran up in that. This is just a most wonderful technique. I always have nicknames for this thing. This is a double camel hump, where the MACD and the stochastic try to rally, but it fails really quickly, and it goes to an E and an F. Peak F in the Chapman wave. Watch out when the technicals fail. 17.24 was the high. Well, what did it do? It goes to 17.24, and then it suddenly has a little spike to 17.30. That turns out to be a G. So it goes to the G. If that's fractionally higher high, I've got to count every peak, doesn't matter. And that right arm extension, which turns out to be a failure pattern, says that it's peak F in the monthly chart, because this week started off down. What did it do today? It gaps down on earnings disappointment. I just did not like the fact. I wanted to be long. Didn't like the fact that there was a potential peak F. I forgot about that leg G. I saw it, but I just forgot to notate it. And it made a peak F top in the weekly chart. If this week it doesn't close above 17.30, chances are at 14.56. I could say with absolute surety there is no chance that it's going to do that. So that's a good indicator here to say that in that particular sector, one of the stocks that was doing very well is now. Look at Hertz, HTZ. Hertz is one that we were long, had a fantastic gain, 2 big gains in that. And I'm talking about 60%, I remember 40 and 60, I think it was. And look what happens. 27.75 is the peak D top in the daily, and then it recycles in the weekly, and it goes to what? A peak D top that recycled. We saw right there, just off that high. And now it's pulling back. The monthly says there's a real good chance that this is a peak C and it's still going to go higher longer term, but it needs a timeout. That's important. It's global. Hertz Global Holdings. Now, let's run these through. IYT, the transportation peak F in the week and the daily, 119.45. Very poor. I hate that kind of pattern. It just, well, I love it if you're short, but just on the long side, it fools you, and then that very bar that takes you on the short side goes right back to pulling, and you say, oh, I shouldn't have covered, I should have added. We weren't in it at all. IYT transportation, iShares, lousy. Daily. Weekly is almost certainly making a peak E. That says time and price. It says be careful at 113.36 right now. There's a good chance that 109 will be the key area of testing. And the iShares monthly is leg D in that resistance area, but it's still very strong in the monthly. Let's go to the TLT. The TLT right now, boy, if ever there was an opportunity to rally, this is it. It's just, this is it. And if it can't take it, it means that stocks and bonds might go down again. Hey, that's really something. We haven't seen that situation for a long time. Now look at these charts. When I go to, there's the VIX running. It's now at 16.55, and the XIV. If I take that away, look at that chart that I was doing. This is really important. This is wood. This is the weekly chart of the iShares Global Timber and Forestry ETF. Peak D pulls back, making an arch failure in that H pattern, lowercase h. Wow, it's trading at 47.04, down 54 cents. If it takes out 45 at any point in the next 2 weeks, this thing's going much lower. Probably going to test the low of 43.86. That breaks, it goes to 42.06 because it has to rally soon to show strength. The home bulls are trying after a leg B, possible trough B, 164.03. Yeah. This could be a trough B. I'm watching the home builders really closely. Oh, there's the music. Doesn't matter. We know exactly what we're looking at. Let me just quickly go to it. The Dow, if the Dow at any point, there we go. The Dow has to, oh, what an ugly candle. If the Dow doesn't hold 14,858 in the next 2 days, it's going to go straight down to the 14,551 level. If it rallies, it's going to close above 50,075 for a decent rally.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.